Yet another record high for the Nifty Bank. The index moves past 44,000 for the first time, even as select PSU banks do see a bout of profit booking. Gains today are led by SBI and largely the private banking pact.
Spark Capital initiates coverage on Hindalco and Nalco with a buy rating. Both stocks surge in early trade.
Morgan Stanley initiates coverage on Yes Bank with an underweight rating, sets a target of 20 rupees per share, citing strong improvement in return on assets.
Paytm moves off opening highs. The company has approved an open market buyback worth 850 crore rupees with a maximum price of 810 rupees a share.
Citi says Colgate's focus on both volume and premiumization is a tall task together. Nomura's view remains neutral with a target price of 1600. The stock, as a result, underperforms. Hello and welcome. You're watching us here on Chartbusters. This is a show where we talk about all the buzzing stocks of the day. We do have with us Sonal Bhutra today. Sonal, it's looking like a good start to the markets. A 66-point pump up on the Nifty. It opened well, saw a bit of a dip, and that dip has quickly been bought into. That's primarily on account of the Nifty Bank. As you can see, we opened well, and then there was a bit of a dip, and now we're on the way up once again. And that coincides with the chart that we're seeing on the Nifty Bank, which is again at a record high. So we'll keep an eye out on the indices, but the stock on our radar right now is Quantum Papers. It's repaid up to 30% of its restructured term loans. Pawan Khaitan, who's the Vice Chairman and Managing Director of the company, joins us now. Thanks a lot, Pawan, for joining in. You have been talking about the debt repayment strategy of the company. Just wanted to understand, with this restructuring that you've announced to the exchanges, what does your total debt stand at right now? And on that debt, how much is the moratorium? Net, how much interest costs reduction are we eyeing going forward?
Good morning. Good to be back.
I think, Pawan, you're on mute. You would probably have to unmute yourself. All right.
No,
go ahead.
I'm good, yeah. Thank you. So before the restructuring, we were at a debt level of 600 crores. And right now, we've repaid about 30% of the restructured debt. So today, my debt stands at about 450 crores long-term debt. And all this has happened out of the cash accruals which we are generating. And I think if the moratorium that we got was for 2 years, and the repayment has already started. It started in September of 2022. And now with the additional payment of 105 crores, we are back on track as if we would not have got any moratorium. So I think all in all, a good performance, a good track going forward. And we are very happy that we've been able to repay a good amount of our loan and back to a reasonable level on my debt.
Okay, so 450 crore rupees is the debt right now in your books, Mr. Khaitan. You've already paid some of it. What is the outlook going forward in terms of debt repayment? And as Mangam asked you, what kind of interest savings will you see in FY23 and FY24 as well once you continue to pay your debt?
So I guess a reduction of at least 10 crores going forward with 150 crores gone. 10 to 15 crores is my savings on interest at least. And I think this proposal of repaying debts should be an option going forward as well with the consistent cash generation which the operation is generating. So today this entire debt of 450 crores I have until 2028 and 29 to repay as per the existing term schedule. But hopefully I should be able to repay that earlier than the schedule as decided.
Take that point. I was looking at your interest expenditure in FY22. It was close to around 70 odd crores. Trailing 12 months, it's been around 73 odd crores. At 450 crores, what is the cost of finance for you? Do we see 50?
So with the restructuring that happened, it was at about 10%. But going forward, we are hoping to reduce about at least a percentage point. So it should be about 9% going forward.
So 9% on 450 crores would mean annual interest expenditure closer to, that 40 crore mark. Is that correct?
Correct. That would be correct. So this is the long-term debt, and interest would carry another, working capital and other unsecured loans, which are a total of about 80 to 90 crores. So that's on the short-term side. So that would add about 10 odd crores.
So roughly 50 crores in interest expenditure is what we can expect going forward.
Yes.
Okay, so that is about your balance sheet, debt figures as well. Let's talk business on the ground as well. We did see that realizations had been increasing for you. Quarter 1, 82,000 rupees per ton. Quarter 2, 87,000 rupees per ton. How has quarter 3 been so far? If you can also speak to us about any shortage that we've been reading about in terms of coal for paper mills. Is that something which is an industry-wide phenomenon? And if not, what kind of realizations are the paper mills and you yourself are enjoying right now?
So we are bettering, we've been able to better our Q2 realizations in Q3. We are better off from 87,000 levels. We are touching at about average 90,000 rupee per ton levels for Q3. And as far as shortage of coal is concerned, yes, we haven't been able to take on coal from Coal India, where we've got linkage possibilities and linkage formalities. But we've been able to successfully take coal from the open market, as well as we are in the biomass sector hub of India. Punjab allows us to procure a lot of biomass, which is rice husk, and we've been able to successfully run our boilers and power boilers on rice husk.
All right. And how about specialty products? I mean, what proportion of your revenue currently comes from specialty products? Because I see you having entered, other formats like straw-based paper. There was cup stock with bio-coating. You have carry bag paper, packaging paper. And we do see the usage of paper having increased as the usage of plastic has come down. So what proportion of your revenue comes from these products? How much is it likely to be going forward?
So currently we are at about 20-22%, and going forward we are hoping to touch about 35 to 40% on specialty paper.
And how much more is this in terms of margins for you?
Margins would be, so right now we are commanding margins of about 26 to 28%. And on this particular segment, we should gain about 35% margins.
Okay, 35% margins from the newer products. What kind of capacity utilizations and volumes are you seeing right now? If we talk about your volume growth guidance for FY23, you saw around 1.5 lakh tons in FY22. What would that number be for FY23? And since we're just coming closer to FY23 end, can you give us a sense of FY24 as well, since these newer products and newer specialty segment will start contributing more?
So we are operating at 100% capacity, and right now, going forward, the current year would see a similar volume of 150,000. So we did operate at 100% capacity in 22 as well. So going forward, we are looking at optimizing our machine capacity and hoping to increase that in 23-24. Going forward, we should touch about 180,000 tons in 24. So that would give the additional volumes and so revenue growth prospects. So current year we should we should end at 1,200 crores, and going forward we should look at about touching 1,500 crores in 23-24.
All right, take that point, 1,500 crore in 23-24. The last question then from my end, just wanted to understand with your debt repayment, business looking good, etc. You intended to be promoter pledge free by the end of next year. Is that likely to be a little before that? What is the current pledge?
No. So we've preceded that. We've already filed a proposal with the banks to de-pledge our shares. It's already lying with the banks, so they're looking at it. Hopefully, I should get success by Jan end.
Okay, so we'll touch base with you yet again in January, and when you report your results as well, Mr. Khaitan. It was a pleasure speaking with you. Thank you so much for joining us and giving us all those details. So that's the word coming in from Quantum Papers. Let's do one thing. Let's shift focus to our special segment now, where we'll get you a few ideas for profit from Money Control Pro. Khushbu Gupta of moneycontrol.com joins us now to talk about a stock that she is tracking closely. Khushbu.
Balrampur Chini Mills is the second largest integrated sugar company with manufacturing capabilities for ethanol, and it also has a cogeneration capacity. The company is preparing for the next growth phase with distillery segment expansion and higher crushing on account of change in cane variety. It is fully backward integrated with sustainable sugarcane cultivation and cutting-edge distillery projects. On the earnings front, the company's subdued performance in the first half of the current fiscal was a result of lower cane crushing volumes coupled with higher cost of production. That said, total distillery capacities are expected to reach 1,050 kiloliters per day at the end of December 2022. and the company would be able to more than double its ethanol capacity by FY24. We believe that higher cane availability and larger distillery capacity provides solid revenue visibility coupled with higher margins. At 12.9 times FY24 PE, the stock appears to be reasonably priced as the company could sweat existing asset and drive operational efficiencies while capturing the ethanol potential.
All right, so that's an idea for profit coming in. Just before we slip into a short break, keep an eye out on VRL Logistics. There was a big block that took place, a block large trade that took place, where 5.3% equity changed hands. Will be an interesting one to watch out for today, because apart from the promoters, no individual entity holds more than 4.3% stake in the company. So is it possible that the promoters have sold? If yes, then who the buyers are is something that we'll have to find out. So all these details, of course, we'll know by the end of today's trading session. In fact, in the evening when the details do come by on the exchanges. So that's about VRL Logistics. Take a short break, come back on the other side.
Welcome back. You're still tuned into Chartbusters on CNBC TV 18. Let's welcome the second guest on our show. The Delhi government has announced that it will now provide 450 additional types of medical tests free of cost to the public at government hospitals across the state. To discuss the impact of this move, we are now joined by Dr. Arvind Lal, who is the chairman and managing director of Dr. Lal Path Labs. Sir, good morning. Thanks a lot for joining us. Well, you know, you do have a considerable exposure to the Delhi market as well. So can you quantify that for us, and what would the impact of this move from the Delhi government be on a company like yours?
Sonal, it's a step in the right direction and long overdue, at least to my mind. In the Constitution of India, it is written very clearly that every citizen of India shall be given free, high-quality treatment and diagnostics, if you add that, for all times to come. So I'm really happy that some government is doing it. And it's not that they were not doing it earlier. They were already having about 200, 250 odd tests. They've only increased the test menu to 400. So the impact on us will be minimal because we cater to a different segment of the society. And this is not a COVID test which has to be done by everybody at one, test price. So these are compartmentalized, kind of offerings which will always be there. And I always give the example of the Indian Railways, whether you travel, unreserved second class or reserved second class, or first class first, or whatever in between, the train is going from point A to point B. But you're all different quality of service. A person who is, sitting in the second class unreserved cannot be made to sit in the first class first compartment. And so is this practiced by Air India also and many other industries. So I'm under no, illusion that this is the right step for us. For the government, for the people of India. And we will also greatly benefit from this because somebody is now putting its eyes on testing. And if you remember, even during COVID time, what was the policy of the government? Test, track, and treat. So this comes under the first segment, which is testing part. And I'm so happy that the government of Delhi is doing it.
We get that point, Dr. Lal. You know, it is a great populist move as well, and someone is focusing on the tests. We also understand that the clientele that you cater to will be different from this. What we're trying to figure is what proportion of your revenue comes in from Delhi. And because these number of tests have been increased from 250 to 400, do you think you could face any sort of incremental revenue loss? And if no, then do you think there can be a possibility of you getting more revenue because some of these guys will outsource it to you? Are any of those possibilities on the cards?
See, Mangalam, the testing for a patient doesn't happen, just by offering one or two tests. So the whole gamut of testing. And for example, take the disease diabetes. So blood sugar, fasting and PP is just the beginning. After that, there are many more sophisticated tests, both in blood and urine, which I won't go into. So you can imagine that the people are dying under the impact of the non-communicable diseases or lifestyle diseases, in which diabetes is number one. So once the Delhi government has found out or been able to discover many more diabetics than presently, all those people would probably come to us for a second referral check. And also there's a great possibility that the further testing will also be done by people like us.
All right. And you know, the second question I had about this itself, and this is a worry, is that close to Delhi is Punjab, and there we have AAP government as well. What if this was to be announced in Punjab? What proportion of your revenue comes from that state, if you could give us a sense? And you haven't told us how much comes in from Delhi. Delhi, I presume, is around 20-25% of your sales.
Well, I'm not a finance guy, so I won't get into the figures because, you know, I can give you a wrong figure. But what I'm saying is that we are no longer a Delhi, concentrated service. We are a 73-year-old pathology lab testing service. And yes, we did start from, Connaught Place area. Then we went all over NCR. Then we went, rest of North, etc. Let me tell you what we are all up to. So we cover the whole of North. We cover practically the whole of the central region, the whole of the eastern region. Last year in November, we acquired the number 2 lab in Maharashtra. So we are very well, represented in the western region. And it's a question of time that we also make our presence really felt. We are already in the south, but with the slightly more offering, we can be there. So as far as we are concerned, we are now running more than 277 labs, 5,000 collection centers, etc. And last year we tested 2.75 crore patients.
Okay.
So this is not going to make much of a difference. And in fact, I'm really happy that somebody has thought about the urban poor.
Yes.
The shift from the rural areas to the urban cities is now very well there. I have read a report in which now they say that no longer 70% people live in the rural areas, now about 55 or 60% only. So the rest of these coming all into the big towns like Delhi, Mumbai, Calcutta, etc., etc. So I'm glad the Delhi government has done what it has done, and it will, give a common man a big fillip as far as his health is concerned.
You are
and
right,
also
Mr.
the health spending will increase, which was, not up to the mark so far.
Yes, Dr. Lal, we take your point, and thank you so much for joining us and telling us that, yes, it's not a big impact on the company, so to say, because definitely your shareholders, when this news was announced yesterday, were worried because the stock was lower. So this clarification would surely help them as well, because they also were looking forward to the clarification coming in from the company, because the worry was that it could possibly impact the financials or the revenue, so to say. Thanks a lot for joining us and clarifying that.
Back, even as the frontline indices are holding up with gains, it's the mid-cap index where most of the action is. 2:1 is the advanced decline, close to around 1,900 stocks advancing. And in that, you have most of the stocks which are gaining from the NBFC space. So case in point, something like an Indiabulls Housing Finance up 9% as we speak. Canfin Homes up 4%. LIC Housing Finance as well as L&T Finance Holdings, all of them have begun to spike from the lows of trade and are moving higher. Suryodaya SFB as well from the cash market is up by almost 10.5%. The stock's up 20% this week. So it has been an NBFC week so far. Let's see what happens in the second half of trade. What we'll do is take a short break, wrap up on this edition of Chartbusters. You stay tuned, as Trading Hour comes up next.